All right, let's talk about crypto trading. Today, we're going to cut through all the noise, all the hype, and get into a really powerful technique. It's all about stacking the odds in your favor by learning how to read what the charts are actually trying to tell you. Let's dive in.
So here's the big question, right? Is this whole thing just luck, or is it a skill you can actually develop? I mean, you see those prices flying all over the place, and it can totally feel like just the roll of the dice. But what if I told you there's a way to move past that guesswork and start making much more informed, methodical decisions? Well, that's exactly what we're going to break down.
And to make this super practical, let's just start with a quick snapshot of what the market's doing, like right now. You know, theory is one thing, but seeing this stuff in action is where it really clicks.
First up, the big one, Bitcoin. So as you can see, it's kind of hanging out around that $92,500 zone. This is a really key area where the price is basically just coiling up, trying to figure out where it wants to go next. And then we've got Ethereum. It's had a really nice strong rebound, pushing back up over that $3,300 level. Now, a move like that signals some serious short-term momentum, and it definitely gets traders looking for a chance to ride that wave higher.
So, this quick look lets us get a feel for the market at a glance. You can see right away that ETH and SOL, they seem to have some pretty strong momentum behind them. Bitcoin's building a solid base. But then you look at ADA and SUI, and they look, well, a little bit riskier. The million-dollar question is, how do we actually make these judgments? It's not magic, trust me. It's a method.
And that method has a name. It's called chart confluence. This is really the secret sauce that helps seasoned traders read the story the market is telling. It's all about finding different signals that are all saying the same thing.
Oh, I love this analogy because it just makes perfect sense, doesn't it? Chart analysis can feel ridiculously complicated, but when you boil it down, it's just about spotting patterns to make better decisions. It's exactly what you do when buying a house, you know? Except this market is a whole lot faster.
So here's the key takeaway. Confluence is simply when you have multiple, separate, independent reasons all pointing to the exact same outcome. For instance, let's say a key price level, a moving average, and a spike in volume all suggest a bounce is coming. Suddenly, your confidence in that trade shoots way up. You're literally stacking the odds in your favor.
And this just nails the difference perfectly. On one side, you have a real decision based on multiple data points. What's the overall trend? Is it at a known support zone? Does a Fibonacci level line up? How's the momentum? And on the other side, you've got a feeling, a vibe. Bro, it looks bullish. One of these builds a consistent process. The other, well, that one usually leads to a lot of frustration.
Okay, so that's the what behind Confluence. Now let's get to the how. We're going to build this out into a really practical framework you can start using like today.
And here it is, your 5-step checklist. It's super simple. First, you just identify the overall trend. Is it going up, down, or sideways? Second, you mark out your major support and resistance levels, the floors and ceilings. Third, add a couple of simple indicators, maybe some moving averages to track the trend, or the RSI to measure momentum. Fourth, look for basic chart patterns. And then, the most important step of all, you stack them all up.
This right here is the golden rule that holds everything together. Before you ever click that buy or sell button, you have to ask yourself this one simple question. If you can't come up with at least 2 or 3 good, independent reasons for your trade idea, the best move is usually to just sit on your hands and wait. Patience really does pay in this game.
All right, time to put this checklist to the test. Let's circle back to those coins we looked at a minute ago and see what a real confluence-based analysis actually looks like in the wild.
So let's start with Ethereum. Remember we said it had that strong momentum? Okay, so we're looking for signs that this current uptrend has a good chance of continuing.
Okay, so what are we seeing here? Signal number 1, the market structure is clearly an uptrend. Easy. Signal number 2, the price is pulled back right into what traders call the golden pocket, that 50 to 61.8% Fibonacci level. It's just a key mathematical area where bounces often happen. And signal number 3, look at that candle. We're seeing a bullish wick right at that support level, which tells us buyers are stepping in and defending that price. That's 3 solid points of confluence, all saying the same thing. The uptrend is likely to resume.
Now, let's flip the script. Let's look at a bearish example for Bitcoin. Because Confluence works both ways. It's just as good at warning you about potential danger as it is at spotting an opportunity.
So here we see Bitcoin making a lower high.
That's a classic structural sign of weakness. Reason number 2, it's running right into a major resistance level, and what do you know? It lines up perfectly with the 200 EMA, a long-term trend line for many traders. Then, to cap it all off, we get a bearish engulfing candle, which is basically where sellers just completely overwhelm the buyers. That is a powerful combination of signals all pointing to a potential drop.
Okay, let's do one more, a really fast-moving one. Solana. It's famous for its super strong trends, which makes it a huge favorite for swing traders who just want to catch that momentum.
Now for a fast mover like Solana, you might see it bounce right off the 20 EMA. A lot of traders use that as a short-term trend guide. At the exact same time, it forms a higher low, which confirms the uptrend is still intact. And finally, it punches through a small local resistance level. See? 3 different signals, all confirming that the path of least resistance is probably still to the upside.
So as we start to wrap this up, the real goal here is to change your mindset. Stop hunting for random tips and start hunting for Confluence. It's all about building a system so you can trade smarter, not just harder.
And please remember this. This is so important. Nothing in any market is a guarantee. You could have a setup with 5 or 6 perfect points of confluence, and it can still fail. This whole method is about putting the probabilities in your corner. It is not about finding a crystal ball. And that is exactly why risk management is and always will be non-negotiable.
And finally, always keep these 4 things in the back of your mind. First, what's the bigger picture, the macro environment? Second, always wait for the price to actually confirm your idea before you jump in. Third, make sure every single trade you take has a good risk-to-reward ratio. And last, especially for altcoins, please look beyond the hype and at the actual fundamentals.
So we've covered the what, the why, and the how. Now the power is really in your hands. So I'll just leave you with this one question to think about. The next time you open up a chart, what's the very first confluence you're going to look for?